on, traders? Time to begin another little update here on what's going on in the market. If you haven't been in touch, fairly volatile 24 hours. Alright, so once we left yesterday, the market was breaking 113 on the euro. Everything's looking super gangbusters. Um, immediately after that, immediately after that break, there was a Fed speaker come out, Dudley, and he's saying, hey, the market's not pricing in the rate hikes, as aggressively as we are here at the Fed. There is a chance that we're going to raise in September, and the U.S. election is not going to be a factor in whether we raise or not. Now, all very hawkish things. Hard to believe it, but we're not in the game of predicting what's going to happen with the Fed. We're in the game of predicting the market's reactions to hawkish comments, right? So that's what we're trying to do here. Now, it was enough to reverse a few rallies. It wasn't enough to reverse a few others. Definitely helped the dollar yen get back above 100. With that, today in Asia, very important that the market rallied as well. We did rally in Asia on the dollar yen. That's taken a lot of the downside risk off the table, the immediate downside risk. But it's wrecking a few of the other trades that we had going. So right at the highs there on the Aussie dollar, that 77.50 was tested again, and then Dudley came out and reversed it. This has done a lot of technical damage to this pair. And today, at the start of the European session, we're seeing some downward support broken. Potentially got a bigger move here coming. We were talking about back here when the market was falling, so we're looking to buy around about 75.80. I'm probably just going to stay out of this market for a second here. I just want to see how heavy this selling is going to get. Some of the impetus for the selling is not just that US dollar strength from the Fed futures starting to price in more a chance of September, increasing that chance of September, but also from the stock market's reaction in that the stocks are falling and risk has been taken off the table. High yielding currencies like the Australian dollar, like the Kiwi dollar, are risk sensitive, and so we're getting some selling coming through on that. And so there's just double whammies happening through here, plus the market had that technical failure. Alright, so this is very dangerous times here for the Aussie short term. I'm still, I'm fairly positive that it's going to go higher over time. It's just that we have to let the market do what it wants to do here. You don't want to get in the way of it. Alright, so I'm not directly in Aussie against the US, but I am in that other trade that we've been watching, which is Aussie Kiwi. And with that heavy selling on the Aussie, it's actually coming through on the Aussie Kiwi. So my losses here are stemming from that Aussie Kiwi. So we did have some good gains yesterday. We've got a couple of trades here that were in much better situation, 3 or 4 hours ago. But they're starting to rally up against us as well. So we're selling that euro pound. Looks like it's finding a fair bit of support here on the dip in the low 86s. Really, there's no reason for me to remain in this trade. Same then for the dollar Swiss. Don't really want to be holding on to this trade when the market's doing this sort of price action and stocks are weak. So it's not a very good trade holding that. I'm happy to hold euro long, a little bit longer. I think the euro is holding up well here in this US dollar fight back. The pound's mixed. Pound suggested to the market it was going to have a go, but it's failing again in the last few hours and it's rolling over. It's going to take a massive effort to get it back up, I think, here. And we break back below 130, then 128 becomes a natural target. So, we're failing again. It's a heartbreak type of play. So I'm out of the pound. I'm in the Aussie Kiwi, but it's not doing well because the Aussie's falling faster than the Kiwi. Kiwi is outperforming based upon some very, very strong data that it came out this morning. Its unemployment numbers were really strong. Now, the market's greeting that with a little bit of skepticism because the Statistics Bureau over there have rejigged how they... so this was actually delayed by 2 weeks, this unemployment numbers, and they've rejigged how they work out the unemployment rate. So obviously the first time after the Stats Bureau changes the way they formulate and you get a surprise number, the market can't react too aggressively to it. Um, but it's helped it cushion against some of this US dollar strength from the rest of the market that's coming through here, and some of that risk off feel from the stocks. And so it's natural that it's outperforming. The other trade that we always look at is CAD and oil, but I'm going to stay away from it just because oil is extremely high, but CAD is not following at the moment, and I will want to wait to see if that oil can stabilize up here before we start to play with that CAD again. So selling dollar CAD is always a trade. So if I had to trade, I'd be selling, but I don't have much conviction on this trade just yet. Maybe I can build up some conviction on it. Maybe you can sell some pound CAD. Let's have a look at pound CAD actually. See how it's performing. That's one trade which makes a lot of sense to me right now without even checking the trade. It's like a fundamental trade and a sentiment trade based upon the movements here. Will yeah, I mean, there's no rush. Let's just see if it wants to rally a little bit higher. Very strong downtrend. We'll let it touch. Let it touch something. Let it rally. Maybe 170. So the pair that's getting a lot of attention as well, just from a lot of my clients, is the Euro Aussie. We talked about selling this at 147.50 a couple of days ago. It's funny how when you talk about doing something and the market evolves in a different way, that you start to get gun shy. I'm actually going to leave this one alone. I don't buy the Aussie dollar against the euro, which is what selling Euro Aussie is, unless I'm ready to buy the Aussie against the US. Okay, and if I'm not buying the Aussie against the US, all the crosses are off. If I'm not buying Aussie against the US, I won't be buying more Aussie against the Kiwi. Right? It's just I'm not locked in on it. I'm not focused enough to make sure that my entry based upon the major is going to be good on the cross. Right, which is what moves the crosses. People ask me, "Oh, this is a really good technical setup on here on the cross." I don't care about that setup on the cross. What is the two majors doing? What are the Aussie against the US doing, and what's the Kiwi against the US doing? You talk to me about pound Aussie, I don't care what the pound Aussie chart looks like. I want to know what the pound chart looks like and what the Aussie chart looks like against the US, because those are the pairs which are really moving this. The cross is extremely artificial. I can't stress how important it is not to trade those pairs too technically. Right? You have to be looking at those majors, because if you're buying, if you're selling pound Aussie and the Aussie against the US is going up towards 70 or 80 cents for the first time, that's a huge risk there that's not showing on your pound Aussie chart. Right? That the market rejects 80 and puts a high in. You understand what I mean? Like that's an extreme example, but it holds even down to the lower timescales. When the Aussie is testing resistance, whatever it may be, or testing support, whatever it may be, whether it breaks or not determines what's going to happen next on that cross. So just keep that in the back of your mind, guys. When it's trending nicely, sometimes it feels like you don't even have to worry about those majors, but when it gets a little bit choppy like it is now, especially as it's trying to reverse, then we have to look at those crosses to make sure we get those good entries. Hope that makes sense. That's a little bit advanced stuff, a little bit of advanced rant that might come across like what did he say? What am I looking at again? I'm not looking at the chart. You're looking at the charts, but the charts aren't the most important part of what's going to move this market. Alright, so that's the market setup here, where we are at. US dollar extremely weak, got a chance to fight back and has fought back against most pairs, and the stock market's under pressure, creating an extra little bit of layer, a little bit of spice. Now, what's my takeaway here? I think the burden of proof is still on the US dollar bulls. I don't mind testing that whole rally, this US dollar rally, with being long the euro. I am extremely interested to see if this dollar yen rally fails or not. If the dollar yen can stabilize and the stock market can stabilize, the pairs that are most important here and the pairs that are going to become really in play are going to be the pound yen and the euro yen. Right, so what we're going to be looking at probably tomorrow, based on what happens today, is going to be this pound yen and euro yen. They have a very strong chance to rally given certain scenarios here, where the dollar yen stabilizes and stock market stabilize, yet euro and pound continue to rally. If that happens, then it's on like Donkey Kong for the for these yen crosses, which have been under extreme pressure. Yeah, so squeezing in the euro yen can get really sharp. Squeezing in the pound yen can get really sharp. We're going to try and get some of that. Let's bring up the euro yen and the pound yen. Euro yen's obviously a lot safer. Okay, so pullbacks all the way to 116, 300 pip type moves here are on the cards if we can get this stabilization in the dollar yen and the euro breaks back above 113. So euro rallies, basically what I'm saying is euro rallies again here without the dollar yen coming under pressure, then you've got this situation where all the crosses are potentially starting to rally. And you can see that with most of them, except for the Aussie. I shouldn't use that one as an example. Pound yen is attempting to base. And it will continue to it. So, we're looking at potential setup here. I'm mostly interested in the euro yen because I'm mostly interested in the euro. All right, so euro long, euro yen long. Those are the two trades. Euro Swiss is almost getting to our limit order. We've been playing that range between 108 and 109. And that's the really, everything's in play almost. It's just, you got to focus, right? You got to focus on a couple of things. Just focus on the dollar yen, focus on the euro, and focus on the euro yen cross. Everything else is immaterial a little bit. We can check it later. Pound, obviously, if what happens 130 is key. Aussie dollar, lower 75s is really compelling. Risk reward on the buy. And Aussie Kiwi, obviously, at 105 is huge. Down here, 105. Let's bring it up. Alright, so that's where we're at in the market. Let's have a look at some of the questions in the Forex Signals chat room, see if there's anything there. Any particular pairs you guys want me to have a look at? Hedge Bitcoin saying he's funded with Bitcoin. Okay, I didn't know you could do that. I don't trust Bitcoin yet. I don't like it when the hackers are stealing each other's coins, right? Let's make it ultra safe so it can't be hacked at all. And don't make me remember stuff. I don't want to have to remember stuff. I want biometric, imprint on my hand to be the key. Right, that's what I want for my security of digital currency. I'm pretty sure I'm going to be wherever my mind is for at least a couple hundred years. Why do I never use stops? Street smoke. I use stops all the time, mate. Every trade I have is as an exit point, pretty much in my mind, both for the profit and the loss. And I close losses all the time. I don't mind taking losses. It's not an issue for me. You need stops for sure if there's an issue. You need stops for sure if the market's really volatile. You need stops for sure if you're over leveraged. But if you're in sort of trades which you're just letting profits run, or you don't want to use trailing stops sometimes, If you're in trades where you're happy for it to fall down a couple hundred pips while you're sleeping, then it's okay. But yeah, if you're not happy about the market, some crazy new story coming out and falling 200 points against you, then use a stop for sure at some place, a hard stop. So mental stops are more what I use. But yeah, I'm learning to love closing out negative positions. There's a freedom in it. Hopefully you close out early, right? Close out before there becomes a problem. Hedge Bitcoin says, Tony, Bitcoin wasn't hacked. It was the exchanges. All right. Yeah. No. No. It's not the same, man. It's still relatively unstable. The fact that you have to have this, exchange in the first place, right, is what makes it a little bit dodgy. And the fact that the market, it can still be clamped down, hasn't got a full reading on by the governments out there as well. I mean, I don't want to be putting substantial money into something which cannot be. There's no recourse. Like, it's full underground. That's my biggest issue with it. It's full underground. Someone comes in and steals my coins. The police can't help you at all, right? I mean, so it's like you're living in some sort of dystopian future, online with this currency that is real, and you can use it, but it's sort of like use at your own risk. I I know it's just the conversion back to real money is where it's dangerous with these exchanges, but that's pretty wild to me. And also, the volatility in the price of Bitcoin is concerning to me. Right? I mean, how much did it fall after the hack? It fell like 20-30%. That's a huge. I mean, if you had, say, 100,000 in there, that's a big paper loss. It's pretty dangerous. So yeah, it's for some people, and some people love it. I'm not against it. In theory, I love it. In practice, there's no way in hell I'm going to use it. Yeah. Okay. That's your whole business, is it? Hedge Bitcoin. You're allowing people to hedge it. Um, yeah, that's probably a good business, right? So yeah, we're looking at a few of those crosses. Someone's asked, Slick is long pound Aussie, and he's asking what next guy's Atlas Earth. What do you think of long Aussie? Well, obviously, when the Aussie's getting sold off and the pound's stable or relative above 130, then this is doing well. I I'm watching this pair though when the Aussie gets down to 75.50, 75.80. See how we're probably going to be at like 172, 173. Look at how the pound's doing. If the pound's short squeezing as well, then maybe we're going to 175. Okay, that's great for everyone involved here. That's in the pound Aussie long. Um, Longer term, I'm definitely a seller still, uh, and would use any extreme pound Aussie rally or pound rally, short squeeze, as an opportunity to potentially sell pound Aussie or sell pound Kiwi. That would be the two ways I want to be involved in that. Bring back the carry trade. So, yeah, just watch as it develops. If you're happy to buy the Aussie against the US at 75.50, then or 75.80 if it looks good, then go look at some of the crosses, either selling Euro Aussie or selling pound Aussie. But yeah, it looks pretty strong at the moment, and there's certainly oversold, right? So it's probably going higher. What was that previous base? Yeah, 173, 50-ish. See how it gets up there. I mean, that sounds like a lot, like 300 pips, but that can do that in 2 days, 1 day. That's nothing for this pound Aussie, especially if the Aussie gets ripped. Now, you know, this is something, if you're a new trader, you want to know, why does this pair move so much? Right, it's just because of the size of these numbers. This numbers here is 1.7. If you're trading Aussie, you're trading 0.75. Okay, 1% move on the Aussie dollar is 75 pips. 1% move on the pound Aussie is 170 pips. All right, so that's why this move. This is why this pair moves so quickly. That's why you have to change in your head your standard risk reward setup that you might use, like 50-point take profit, 25-point stop loss cannot be used on pound Aussie if you've been using that on your majors. Alright, so just keep that in mind anytime you're trading some of these crosses. Anytime you're trading some of those funny pairs, like, I don't know, dollar ZAR. Anything where the big numbers is like, ooh, how many pips is this? What is my spread? It's easy to get confused. A little bit similar with the dollar yen and the pound yen, but just because it's so close to being 100 times the size of a normal pair, people work it out pretty quick. But back in the day when the pound yen was really high, it was a little bit more of an issue with clients. When it's 180, then a 2% move is 360 pips. All right, that's a lot of pips for not very big percentage move. And so people have to adjust their risk reward strategy. What do we think of the Aussie jobs numbers tomorrow? Aussie jobs have been pretty strong the last few months, guys. It'd be surprising if the numbers came in whack, but you know, there's always a chance with the Australian jobs numbers because they've been very volatile in the past couple of years. But in the last few months, they've been surprisingly strong. So there's no reason for that not to continue. And the forecast is 10K. That's really the only thing that moves it. The unemployment rate is a secondary figure. It's always just the headline rate. Inside that headline rate, though, what we do focus on here in Australia a lot is the full-time jobs and the part-time jobs. Obviously, as a country, you want most of your job change to be in the full-time jobs. So there's a strong 10,000 tomorrow, and there's a weak 10,000 tomorrow. A weak 10,000 where there's 20,000 new part-time jobs made and minus 10,000 jobs lost in the full-time jobs. That's a weak 10,000 number. Right? Obviously, if you get 30,000 full-time jobs and lose 20,000 part-time jobs, that's a strong 10,000 number. So you don't get that when you're looking at your Forex factory. That's something you're going to have to check on Twitter, or if you've got Reuters, just look a little bit deeper, or go to the ABS website, look a little bit deeper into those numbers, because it's very important for the follow-through on a good number, or the whip. So when the market does this crazy stuff, like, why is it falling? It was a really strong number. It's because the internals are weak. You see that in the non-farms payroll. We'll talk about non-farms next month as well. What the internals mean. Alright, so yeah, I mean, pretty interesting development in the markets, guys. I still believe the US dollar's in trouble. There's definitely a big fight going on though. I mean, the market is showing lots of volatility and giving both sides a chance here. We'll have a bit clearer view tomorrow if we're talking, and the dollar yen's back towards 100, the euro's back above 113, pounds up near 131. Then I think the US dollar bears have been beaten, but it hasn't proven simple, and trends haven't been really easy to trade lately. So especially on the euro's been cheeky. So if that's the case though, any extended Aussie dollar weakness on the back of, say, maybe even further selling here in stock markets and for another day or two, would be a really, really good a really strong, compelling buy. And if oil continues to rally, then dollar CAD becomes even better than those other two commodity currencies, the Aussie and the Kiwi. So let's have a look at some of the trades in the trading room, though. We do have to every now and again review it. Long dollar, long Kiwi. All right, that's terrible. What is that? That's a Potter. Potter, you trolling, mate? You trolling? Yeah, that's a perfect chart posted by On It. Can't get better than that. DRC DP obviously made a little bit of money. Markets rolled over here. Buy new creator short the euro. I don't know. Obviously, I'm not with that trade. I'm not like that. I'm not on that. I'm not on that same wavelength as that. You're Aussie short. You would have been stopped out. Sorry there, mate. Vin. Might have to post a couple of new trades here. The last one's 4 hours ago. A little bit too long ago. We'll bring in. We'll have a look at some of those pairs that we're talking about there. Might go. I don't know. Nothing's clean right now, but long euro or long euro Aussie maybe. A long pound Aussie. Slick. Why haven't you not posted your long pound Aussie? Get in it. The people are waiting for you. There's a $500 on for. There's three $500 prizes cash. All right, from a broker sponsoring. It's worth your time. And you can't get those negative ratings anymore. Class is number one. Class is killing it. Class is at 300 likes this month. Albanaz is at 156. The buy new creator is at 155. My favorite poster is Wings at the moment. He's at 146. So he's doing all right. Young money, cash money. I'm not gonna delete it, Nick. Hey, what if on it's special, mate? Yeah. Oh, you've deleted it already. Okay. All right, I'll look. I'll get Slick to post a pound Aussie. In terms of the news from the banks, everyone's having a little dig at the US dollar lately. What we're talking a lot about is this Jackson Hole. Jackson Hole's coming up next week. Now, I've read some very interesting articles on Jackson Hole. Namely, there was an article put out by Citibank suggesting that the Fed may change the target, the goalposts of their monetary policy. Now, if they do that, talking about that is extremely dovish. Talking about that before a potential rate hike is even more dovish. The only reason the timing of it is that you would be delaying rate hikes. Right, so any sort of continuation of this chatter that we're getting about Yellen making a big announcement at Jackson Hole about what the US is targeting as for its monetary policy is a potential death note on the Aussie dollar on the US dollar. So let's let me bring up that. If I see if I can find that. Very important if it happens. Come on. Oh god, I think we might be too far back. I'm sorry guys, probably can't see it. I have downloaded it somewhere though. Let's have a look. Jesus, you guys are lucky. It's just, all this free shit. is this program? Alright, so it's about Williams and his dovish flip. So this first bit's very important. This is nothing to do with old mate Dudley last night, but it is something that was going on in the backdrop. I'm I'm streaming from Sin City, Potter. Someone was saying that last night to me that this is Sin City. That's why we've gone with the black and white today. You listen here. You listen here. Good kids. Want to make money in this racket? You listen to Fat Tony. He's a moneymaker. Alright, so this is potentially what could happen next week. Now, if it happens, it's huge. If they talk about it, changing to this nominal GDP targeting, which is something you might hear a lot more of, then and changing their view from focusing on inflation, saying that we've entered a new world where inflation is just going to be lower, then targeting nominal GDP might be this thing that begins and becomes part of the lexicon and part of what we focus on as a US economy watcher and a Fed watcher. And then what it does though is just delay the hiking of rates, and that would lead to extreme US dollar weakness, 120 plus in 3 or 4 months type move. So it's not by no means is this certain that this is going to happen next week. It's just something in the backdrop that you have to be aware of. Also, they go on to say that there's some inflation starting to be seen in some of the non-EU countries, Euro countries, Euro currency countries. But if that does happen, then potentially we're going to start to see that German CPI start to tick higher, and that would be really supportive in the current environment, give some sort of extra stimulus here for the euro to rally. So those two things together, a US change in monetary policy and some inflation coming through in eurozone. Oh, wow, that's 125 stuff. Yeah, it's really quite interesting how this market's going to develop in the next 6 months. So yeah, obviously I'm biased, right? I'm pretty euro positive. Yeah, look, they're looking at some pretty big divergences here on the RSI. Double bottom with a hammer. This is on pound Kiwi, guys. And this is the same low from back in 2013 as well. So wow, I mean, look, there is some credence here to this setup. I haven't looked at these before. This is makes the pound Aussies that we're looking at a bit more interesting, because there's a lot of correlation between the pound Aussie and a lot of correlation there. So yeah, let's see how that develops going forward. They're slightly bullish on the euro, looking to retest that 113.2030 level. Neutral on the dollar Swiss. Neutral on the pound. Bullish on the euro pound, but expecting a pullback initially. Now we were selling the euro pound yesterday, but we didn't get much follow through, so we got out early. All right, you're cheeky. It's looking a bit better now in the last hour. So yeah, euro pound is one which we'll watch it carefully for selling levels. Okay, dollar yen, they're turning bullish. Tested 100, had a bounce off it. Looking for that rally to extend here. It makes sense. It's not really the way I trade though. It seems pretty dangerous to me. Well, they're still pretty bullish above the Aussie, but they're looking for 76, 30, 50. I don't know. I'm pretty happy to get in around 75, 50. I just get this feeling that we're going to have a bigger pullback into that. Imagine this is a trend channel, and we just pull back a little bit further towards the bigger trend lines. Yeah, so they're a bit more bearish on the dollar CAD after it broke that trend line, and I can understand that you want to be selling it. It's actually not that bad to sell. I'm probably going to go in here and do a small sell actually. Let's have a little look. Didn't get the best entry. Just do a quarter lot. The good thing about this particular setup is that we can put our stop quite easily, even just at 126, 129.60, and it shouldn't be going up there unless oil crashes, and if oil crashes, you probably want to be out of it anyway. Don't try it at home. This is ginger beer, Potter. 0 alcohol, mate. Slick, did you post your pound Aussie chart yet? Don't you talk to me smack about the pound Aussie unless you post your chart. I want to see your entry, and I want to see your take profit. And then we're going to look at it every day and make sure that you get hit, alright? Alright. So yeah, that's enough research for today. We'll see how it develops tonight on the dollar yen and the euro particularly. Hopefully we are above that 113 level. Then tomorrow is a lot easier to trade. We'll be hint. We're going to be selling the US dollar. That's what we're going to be doing. If the dollar yen's a little lower and the euro's above 113, we're just going to pick which pair to be selling the US dollar against. Alright guys, good luck with your trading. If you want me to look at a specific pair, Street Smirk's asking me in private message to look at dollar yen. I'm really long-term dollar yen bull, but short-term I'm a US dollar bear, so it's hard for me to be buying the dollar yen. I'm definitely not against it range trading between say 100 and 103, but I'm in no hurry to buy this particular time. I want to see it base with some double bottoms, with some fundamental support from the US dollar somewhere. Otherwise, I won't be buying dollar yen. I might be buying euro yen or pound yen. Okay, so if that makes sense. And selling is not my game down here either. So, alright guys, I'll be back tomorrow at 9 GMT. We'll have another update there. We'll be talking about what happens when the oil numbers today. There's big oil numbers tonight, a little bit later, and also what happens with the Australian unemployment numbers. Good luck with your trading. Trade safe, guys.